Hello, everyone. Today is March the 7th, Tuesday. Welcome to the Hurley Investments Financial Services Commentary. I could not have found a longer name for what we do here on these Tuesday nights. I have a guest with me here. Keeve, are you there?
I'm here. How you doing, Kevin?
I'm doing good. This is Keeve Bybee, the newest member, the senior portfolio manager for the state of Utah. He is here with me tonight because I think he's got some very interesting thoughts and commentary about our market, and especially one of the stocks that we trade all the time, NVDA. So, to get started with you, I'd like to start with going over my thoughts with you tonight. And I've got a couple thoughts, but I want to start out with taking a look, or I guess a broad description of our market would be right now, our market seems to be in a wait and see mode. And what I mean by that, our market starts off down 100 points and then it all of a sudden finishes flat for the day. As you can tell, we've been in a pretty tight range, 100 points on a 2,100 point market. Had our little gap up, but taking a look at our chart today on the Dow Jones Industrial Average, still technically overbought but bullish. And we've seen a couple of those little dojis there where you're seeing technically a doji is supposed to be a reversal, but we had a doji on Thursday of last week, a doji on Friday. Um, Looks like okay, I got my days. Today's Tuesday. So yesterday we had a doji, which was Monday. Friday we had a doji, which was obviously on Friday, right around that $2,100 mark on the Dow. Excuse me tonight, I'm not really talking coherently, but we are in a wait and see mode. And as I wonder, what are we waiting to see? I think the biggest one will be a rate hike. We could see tax reformation with yesterday actually getting Obamacare reformation or abolishing Obamacare, and we're still waiting for repatriation. Any comments on any three of those, Keeve?
No, it's kind of interesting though. Some of these things are fairly conflicting. Rate hike, that's tends to bring the market down. Equities, tax reformation, that's going to be a positive thing. A bullish repatriation will be bullish. So those are just some of the conflicting signals we're getting, and obviously some of the news as it comes out for what Trump is able to negotiate for international trade and that sort of thing is just a big question mark.
It's a huge question mark. I agree with you. In fact, I'm going to tell you, for the last 3 months, there have been a lot of conflicting data and reports. In fact, um, historically, we usually have a pullback or a correction, is the correct term, a correction of 10% or more every 4.2 years, and we're going on almost 9. Reports, we don't have reports that are consistent. We have half of the FOMC, the Federal Open Market Committee, that says we should raise rates, yet when voting comes around, we have a token dissenter or two. Their comments, the chair's comments throughout the weeks to organizations are very hawkish. Yet when you look at the comments after a meeting, they're very dovish. I must say, I am quite impressed with what Trump has been able to do in what's going to be deemed his first 100 days. It's obviously pretty easy when you have a House and a Senate that are majority right now Republican based. So he should have the opportunity to have a lot of his new acts, a lot of his new proposals, his reformations, his uh, I don't know. You can name it all kinds of things, right? But you should see a lot of these new laws pass through relatively easy. I just hope, and obviously for those that have known me and followed me, I was obviously going to be a Trump supporter. I am a Republican. I like to consider myself a conservative Republican. I just hope he can treat the United States as good, if not better, than he treated some of his own companies. I obviously don't want to see us go bankrupt. I don't want to see the United States pull a bully card in the world. But I got to be honest with you, I'm definitely for having America first, and I think it's been a while since we've been that way. If we take a peek at our markets, or I guess the thoughts that I wanted to go over with you is how do you trade, or what is one of the better ways to trade? I'm going to put how. How do you trade a, and I'm going to put it this way, conflicted market? It's it's tough. In fact, it's really tough. I had Keith here tonight. Keith, could you talk a little bit about some of the NVDA trades you've been looking at and or possibly doing, and just your thought process on maybe the frustration, the ease, some of the things you might have done by making a trade, not making a trade. Walk us through some of your thought processes. And again, I'm going to have Keith talk a little bit about his frustrations so he can see we are human and we do find some of the same things that you guys are looking at. Keith, take it away for a couple minutes here.
Yeah, of course. With NVIDIA, it's been one of those ones that have just taken off and just kept going up and up and up. And if you look at a chart, you'll see hitting up to 120 and pulling back down twice in a row, but holding at the 100. It's in a bearish trend right now, but seems to be holding above 95, and that's kind of what I'm looking at. I'd like to see it move back up, and some of the frustrations you see how much swing there is day to day. If you're doing trading on NVIDIA, let's hope that you've had a nice run up from where it was trading from last year, but I guess it can be frustrating. Some of these swings. It hit. Thanks for drawing the arrow for me. 95.70. Few days back, again, stayed above 95. That's a good level of support. So we'd like to see that hold there, and if it does, like to see it trade back up to a 107 there at the 50-day moving averages. But
I think we lost you there for a second, Keith. You said but, and then you disappeared. Did you accidentally mute yourself?
can you hear me?
I can hear you now.
Sorry about that. I was looking at playing that low there and at 95 holding up, so I'd like to see that continue up towards 107 and do a spread trade. But one thing I've really come to be a strong supporter of is if you're doing spread trades, especially on something fairly volatile like NVIDIA, and you're hoping for just a small bump to the upside, to give yourself plenty of time. Go a few months out. Go out to May. Give yourself some time, especially with, as we'll talk more about some of the economic events that we've touched on. But I had gotten in uh, there as it came back from that first 95 hit, and thank goodness that I went out in some time as it continued to pull back and touch it again. And I think that one of the things that can be frustrating is seeing these movements day to day, and uh, having your uh, emotions whipped around. I do this full time. I check these economic reports out. I do the technical and fundamental analysis, uh, and you know, I can imagine if someone's doing this on the side or they have a full-time job, this could be fairly tricky. So give yourself some time, go out a few months, and set yourself up for success. Don't day trade. don't don't let yourself get whipped around with your emotions on the day-to-day swings. And so that's kind of what I'm doing. I think it's very worthwhile to if you feel like you can't handle the whip around emotionally, give us a call. Let us help you. Uh, Let us talk you through some of these things, and hopefully we can be the ones to manage some of your trades for you, and be the ones watching it from a day-to-day basis, so that you have less worry, so that you have less um, emotion from the day-to-day, and let us worry about it. I think that there's some huge value to doing that. Just seeing, from me doing it full time, looking at it day to day, it could be very emotional and tough to be doing it on the side for yourself. That's definitely something I've become a huge believer in.
Hey, I agree with you. I really think that, as you made a couple comments there about having a little more time frame, gives you time to make a decision where you don't have to be, um, where you don't have to have a huge, oh my gosh, I got to get done before 2 o'clock. Oh, I've got to get done before 4 o'clock. Oh, I've got to have it done and ready to go now. It's tough. It's really tough. And again, I think if you're doing those debit trades, 60 to 90 days gets you through the whipping around. If I can make another comment, we had Snap. Do you remember what Snap is, by any chance, everyone? Just curious. It's that new what? Snap Inc. It's a platform.
Snapchat.
Snapchat. Thank you. I couldn't remember the chat part of it. Snap had what they call a buying price for institutions that was at roughly $17. So if you had billions of dollars, you could go ahead and get into Snap at instructions. You get into Snap at $17. The rest of us, when it opened at a whopping 24 bucks. Anyone have any idea where it might be trading at? Well, let's just say where it closed at today. It's funny because obviously it closed lower, right? Today it closed at 21.44. So you could have got into Snapchat as high as 26.50, and right now it's worth 21.44, being down about $4.50. I'm pretty sure options aren't quite available on it, but a lot of people have asked, well, do you ever get into IPOs? And the short answer is no. I really stay away from them. I did get sold in one 2 or 3 years ago on Petrosonic Energy, which was an oil company that separates the light crude from the heavy crude without the $1 million worth of equipment. You can do it relatively cheap for only $250,000. And obviously, as luck would have it, that 15-cent investment per share to the tune of 8 or 10 or $15,000 is now worth a half a penny. So not the best investment I've ever made, but the short answer is, Kevin, what if it's the next Google? Well, obviously Google didn't start overnight going from 17 to 900. You got plenty of time in there. Well, Kevin, I wanted to get in at 17. Well, so did I. But you know what? I don't have $1 billion to go put into it. I can't buy 100 million shares. I'm not big enough to have my wants needed. Oh, well, I was trying to day trade and I got in at 24. Well, you're down. And chances are it'll fall down below that $17 price before it gets some support. An IPO is never, if, and I know I'm kind of generalizing here, but it's never in the best interest of a retail trader. It's really not in the best interest of a money manager, unless they're willing to hold on to it for at least that first 2 years, where you do go through some earnings. And I mean, I can think of the most recent IPOs. Facebook took a big drop. There have been quite a few that have taken big drops after their IPOs, and it's just not necessarily the best thing to be in. For that reason, I like protection on stocks. And protection equals a long put. I hope no one thinks a short call is protection. In fact, I'm going to say, no, short call. You could maybe even get a 2% credit. Good thing I can spell so good. Credit on the value of the stock, which equals how much do you have at risk? If you can take a 2% credit on a $100 stock, you can get $2 of credit. How much risk do you have? Keeve, can I ask you that question? See if I can trick you. How much credit do you have on a how much risk do you have if you can take a 2% credit on the stock?
We've got 98%.
90% of your total invested capital is at risk. I love hearing people tell me how they get paid to play in the market. I took a covered call. I got paid to get in cheaper on my stock. And again, I've said this to you a million times. Hey, it's about risk. Managing risk is how you make money in the stock market. 98% total capital is at risk. Well, Kevin, you pay 5% for 3 months for a long put. Man alive. See if I don't push the wrong thing. For 3 months for a long put. And I'm going to call it at the money if that's okay. I usually put it at the money or slightly in the money. Total risk, 5% of my total invested capital. I'm okay with paying to play. I'm okay with protecting my stock ownership. I'm okay with taking as little risk as possible. Because right now, our market is so overvalued. I mentioned to you a week ago, Stockman, my goodness, look at this gentleman calling for the end of the world. But all his numbers make sense. The numbers don't lie. It scares me. It really scares me when I look at the market and when I see how far mathematically it can go down to. I could make you a justification that our markets can go test 765 again because we haven't had the growth in the in the S&P 500 index. There's been no growth for businesses. There's been share buyback to stimulate growth, or it appears growth, but it's been awfully darn scary. And you just got to be careful. You really, really, really got to be careful. With that said, going on this week, I'm going to get off my soapbox. Going on this week, some things that have happened. Kiev, don't hesitate to jump in any time you want to. Still can't type. Factory orders came in at a 1.2 versus an estimated 1.0. Show some good macro manufacturing growth. Trade balance, not so good. Negative 48.5 versus an estimated negative 48.5. Well, Kevin, that's not too bad on 48.5 billion, if I can say that. Well, again, it's negative. Yeah, it's in line, but it's in line with a crappy number. Consumer credit. I was really worried a little bit about Visa today. I wanted to see more consumer credit. I'd like to see more buying. Consumer credit was estimated to be at 17.0 billion. We came in at 8.8 billion. Half of what it was supposed to be. Again, I think one of the main points of what's happening this week is I would deem this a wait and see week because of the FOMC rate meeting next Wednesday. And of course, don't forget, kind of unusual, we have our average work week this week. Should have been last week, right? But our average work week numbers, non-farm payroll, private payroll, unemployment rate, hourly earnings, average work week hours, all come this Friday. So it'll be very interesting to see. We might get a bit of a reprieve tomorrow with the ADP employment, but it's a wait-and-see type of week. In all reality, we're also on our third week of retail earnings. It's usually the tail end. So you'll notice as we go through Urban Outfitters, I kind of put Dick's in there. SMRT, I forgot what that is. Buckles there. Kirkland is there. Vales reports. Not a whole lot of bellwether market movers, but we do have retail earnings which have been horrible. Where will our market end this week? I'm just going to say down. I think it's down just because it's a wait and see, but I'm going to say down / flat. It could be up. We've had a couple down days, not significantly down, but we are in a wait and see. We just need to, in all reality, we just need to sit back and wait and see. Any comments you have that you want to make here, Keeve, on anything on what's happening this week or why?
Yeah, I think you nailed you nailed it on the head. If you want to scroll down just a little bit where we can look at the Dow there, with some of the conflicting reports that we mentioned earlier, maybe in all likelihood we're set for some few weeks of where we saw back at the beginning of the year and back in December of a sideways market where things are still waiting to pan out. We're still waiting to hear some things. We have positive expectations on some reports and some negative expectations on others. So if you have to guess, that's probably a good guess to say that we're going to head sideways for some time with those conflicts in reports. But sometimes the hardest thing I think to do in trading, in investing, is to be patient and to wait and see. I think that it can be easy to worry and to make a knee-jerk reaction, but you have to say the best thing to do sometimes is just be patient and wait and see.
You know, being patient is hard. It's interesting because I'm going to squeeze down to a different section here. How am I looking to trade? And right now, I'm not trying to have short calls in the portfolio. Reasons why. Any tax reform, got to spell correctly, any tax reform or repatriation is going to give us a significant bump in our stock markets. It could be another run for 5 or 10%. Well, Kevin, if we're going to go sideways, what are we going to do? That's a tough answer, right? It's a tough answer. Am I giving up some credit for a month here? Or actually, it's kind of started last month, right? Am I giving up 4 to 6 weeks of possible covered call credit? I am. I'm definitely giving that up for the positions that I have, because a lot of these positions that I trade are going to significantly benefit from taxation. D.H. Horton. There's just so many that I could see that would make, well, it would have a significant difference in their earnings power and growth, their earnings per share, their bottom line, if they got that 10, 15, even a 20% taxation would make some companies significantly more competitive. I'm going to jump back up here. Not interesting that we're kind of moving sideways. Notice how we're coming down off of that overbought peak right here. Just moving down, nothing to be worried about as of yet. Hopefully a fall doesn't catch us by surprise, right? Especially if you're in trades. The S&P mirrors the Dow, but we're with the last 2 days, but we're technically no longer overbought, but still bullish. Looks like we're going to go down and test that 2,300 level where we consolidated a little bit there in February. Have maybe some good reasons coming up with the average work week and or the Fed chair meeting next Wednesday for their decision. And obviously the Qs, the NASDAQ is technically overbought. Kevin, it looks like it's just coming down. Technically, it's not overbought anymore because it's at 67.69. It's not confirmed. One day does not make a trend. I'm still telling you, technically, the NASDAQ is overbought. If we were to scroll down a little bit more, where's the SP going to end for March? I really want to tell you it's going to go down, but right now I'm following the trend. I'm staying with the trend. We'll call up 2%. That may change next week. We'll see what's going to happen. Earnings, nothing on tap that's going to really move markets. Economic reports, we definitely need to pay attention to Friday average work week, even though I can't spell. All those are coming up, tacked on with the Treasury budget. Internationally, Germany today had the manufacturing orders, Japan merchandise trade balance, inflation tomorrow, machine orders on Sunday will work our futures for the following Monday. I talked about how I was trading, pretty simple. I did hear yesterday from Kramer an ingenious way, what I've been talking about for years. He did a fabulous way to tell you to watch out for anything that's really above a 5% dividend yield. Anything above 5% is technically considered unsustainable. And he did a great job. I put the links in there because if you listen to it, or if you click on the link, you can listen to his video and see what he was talking about yesterday. Why trade worries could hit markets, just some things to pay attention here in the next little while. Again, I don't think, did I? Yep, I do have the link right above that. There are also some videos there and some links within it that I think are pretty interesting. I would suggest you read through this to see more of a macro picture of what we're looking at. And then obviously, I love Stockman. He's one of the best economic analysts that I have ever seen. And anytime he comes on CNBC and or Fox News for that matter, I do catch him on Bloomberg too. He just works with the numbers. And being a numbers guy, I really like what he says and what he has there that's available. With that said, I have no more for you today. I'm sorry I'm doing this a little bit early, but I did want to introduce Keeve, have you guys get to hear him a little bit. And more importantly, I'm just busy, so some of these guys are going to start to take over at midweek if I need to. Keeve, are there anything you'd like to say to finish here with us tonight?
No, I think you've wrapped up some good points. I would just say to, um, again, don't be so trigger happy on some of the positions you're in. Um, yeah, just be patient, especially through these next few weeks.
I love it. You know, I've got someone that believes in nailing your hands to your seats, put them underneath your butt and sit on them. You don't have to make a trade every single day. You don't have to make an adjustment or change a trade every single day. Keith, that's some great advice. I, again, appreciate you having me here today. Everyone, take care. I look forward to seeing you next week. Next week will be a travel week, so please check your email. Again, I may have to do something pre-recorded and send it off to you, but I appreciate being here with you today. Keith, I appreciate taking your time out today to be with us as well. Guys,
No
have a great
problem.
end of the
Thanks for
week.
having me.
Thank you here for being with us. Guys, have a great end of the week, and we will see you next week. Bye-bye, y'all.